Hey guys, Cameron here with Emerson House Buyers. Every week I bring you tools, tactics, strategies, lessons I've learned, things that have helped me build up a sizable rental portfolio in about 2 years. And today I'm taking a question from a good friend of mine who asked about the benefits of these crowdfunding sites. So it I'll just put it bluntly: if you don't have time, then these crowdfunding sites are amazing, right? You get an opportunity to buy into huge deals. Now, what am I talking about exactly? Maybe some of you don't even know, so let me back up. So you might have seen, if you're a Mint user or you get on Facebook, you'll see these ads that say invest in commercial real estate, invest in a multi-million dollar project, invest in real estate with as little as $1,000. Well, what these companies are doing is they're taking a bunch of money from they're taking $1,000 from 1,000 investors, and then they're going and buying these big projects, or they're taking $1,000 from 10,000 investors or whatever they need to raise, and then they're going out and buying apartment buildings, strip malls, hotels, development projects, whatever the fund is designed to actually accomplish. So sometimes they even specialize in elderly homes or nursing homes of that nature. It all depends. So that's what these companies are, or that's what they do. Now, the pros and cons of it. There's only three things. You guys probably heard me say this 100 times. There's only three things you can ever bring to a deal, a business transaction: time, money, or experience. So time, money, experience. If you don't have time and you don't have any experience, but you have a lot of money, this could be a way to get in. You could also look to private lending. Now, the pros and cons of this: you're not going to capture a lot of the upside with these big companies because they're going to give you a preferred maybe 8 to 12%, at most, at best 15% return on your money. Obviously, they're making 10, 15, 20%, whatever it is. They're making above and beyond what they're paying you, or they wouldn't be doing the fund. It'd be like almost investing in the stock market, where you have little control, but a lot of liquidity. Some of these you don't have liquidity in, so that's another concern you'd have to look at. Sometimes you have to put it in there for 2, 3, 4, 5 years until they cash out and can pay you back. Whereas if you did a private money lending, let's say you have some money, and instead of putting it into one of these sites, you actually go out and find somebody who's doing some rehab work, who needs a little bit of cash, and offer them 12% and 2 points, which means they'll pay you that on the money that you borrow. That's pretty standard rates. Sometimes they can get as high as 18% and 3 to 5 points. But I've seen everything as low as 8% to 18%, and then points from 0 points to 5 points. It all depends on what you negotiate. Now, when you do that with somebody who's really, like I said, well known, I wouldn't go first time with somebody you didn't know, or somebody that wasn't well known in the industry, to somebody didn't have some experience, because you don't want to lose a lot of that money to start out. You can also ask the person or the individual or the company that's doing this, can you be more involved with the process and learn about the process? And a lot of times they're going to tell you yes, absolutely. If you want to come by the project, if you want to get involved, please do. So very rarely have I seen people who are kind of off-put by private money lenders, which would be yourself in this case if you're going to lend money to a flipper or somebody who's buying a rental property. Very rarely have I seen somebody say no. Now, I haven't done it a lot. I'm always more than welcome to bring people on, because it opens their eyes. They feel a little more comfortable with us, and they might tell somebody else and bring somebody else on. And I don't have anything to hide. If they don't let you come around or don't want you around, that could mean that they're not real comfortable with you, or that they might have something to hide. So that'd be something to discuss. So to kind of recap, would I put my money in these? No, because I'm making 25, 35, 100, 150, 180% on my money investing in real estate. My deals are not liquid. These crowdfunding sites aren't teaching you anything about real estate and wealth building. but they do give you liquidity to get in and a small amount to get in. Some of them give you liquidity. And also, it's really not time intensive. There's no hardly any time needed on your part. It'd be like buying a stock or anything else. Whereas what I do, it's a lot more time intensive. You have to spend a lot of time on it, but you're rewarded with that time by increased returns. So to answer the question, would I do it? No. Would it fit a situation if you had a lot of money, you didn't really want to learn about real estate? Absolutely. But I will say one other caveat is look into the private money side, get in with somebody. If you really want to lend and make some money on, a couple $100,000 or several $100,000 that you have, maybe you got $1 million in the bank, you got an inheritance of some sort, or you cashed out, you sold a company. Look at some guys or gals who are in your area that are doing a lot of deals and see if you can lend some money to them. Maybe you can even give them more favorable rates. Say, hey, if somebody's giving you 12 and 2, can I go 10 and 2 or 10% flat 10% to start out until we get comfortable, and just see, can I come on and see what you guys have going on, kind of walk me through the process, and then you establish a relationship with them. And if that's something you eventually want to do, then you have an in, or you can partner with somebody. When you do it as a private money lender, there are so many different options. It's basically just whatever, you're limited by your imagination. It's whatever you and somebody else agree to. Whereas these big companies who are doing this crowdfunding for investment deals, they're all SEC regulated. They have a lot of hoops to jump through depending upon what they can do and can't do. So be cognizant of that. But that's my thing. I would never do it because I'm looking to build wealth, learn about real estate, and I'm making a lot more than 8 to 15% of my money. But I have a lot of time invested. If you don't have a lot of time, you want to make some money, look at crowdfunding or the private money side. So again, it always goes back to your goals. What are your goals? Where do you want to be? How much time, experience, or money do you have to invest to get you where you want to go? Hope this helped, guys. If it did, let me know. If it didn't, let me know. And I appreciate all the questions and look forward to continually delivering value on a daily basis. Comment, especially if you use this or you use this strategy and you have a good experience, bad experience, just keep engaged, keep interacting. I'd love to hear from you guys. Thanks.